Morning, it's Vijay here. Today is Thursday, 6th of February 2025. Welcome to yet another episode of Pre Market Commentary. I believe today's chart will show you some interesting things about where we are in the market, whether we are just in a reaction to a bear market which started in September, or we are in the stealth bull market. You'll be surprised by the observations which will come at the end of this episode. So let's just dive in and start. So here we are. Now, is this a stealth bull market or just a correction in a bear market? Now, just observe this chart. This chart is a market cycle chart. So you have a stealth phase, the beginning, where the smart money is investing. Then after some time, it takes off. Then people become aware of that something positive is happening. That is where the institutional investors will get in. The smart money is not the institutional investors. Okay, please remember this. Then we go to a mania phase where the public joins in. And then right from takeoff, first there will be a sell-off, then there is a bear trap, and then people will be bearish because people feel, no, this is all correction. And then media attention, enthusiasm, greed, delusion, and new paradigm. So new paradigm is when people feel now the market cannot correct. Then it suddenly corrects. So then people begin to deny and give reasons for it. And then it starts going up again. So this is what we call a bull trap. People begin to feel now it has come back to normal. And then it falls significantly where fear and then finally capitulation happens. And then when it starts rising, people still do not believe. There is something, despair is there. Nobody trusts the market. And then slowly and steadily it returns to the mean. So the mean is the, right from the stealth phase to the despair phase. So that is what the mean is. So let's quickly go to the mundane, which is results today. SBI, Bharti, Trent, ITC, Hero, and Britannia from the Nifty. ITC and SBI and Bharti will be the more important ones. Trent, I think, will get sold off. Hero MotoCorp has not done something great, but you never know. It's highly oversold. So it may start showing positive in terms of share prices. Positive move in terms of share prices. Britannia also may get sold off because FMCG is not doing well. Among others, we have NCC, we have Shoba, Apollo Tyres, Muthoot, PI Industries, BEML, and the steel company NMDC and NMDC Steel, and a fertilizer company Chambal and Cochin Shipyard. So all of these are popular companies. Volatility will certainly be there. One has to be very, very careful in these stocks. So what are the cues this morning? Nifty snapped a 2-session winning streak. It was quite steady for most part of the day, though it opened with a positive bias because of the FII investment of 800 crores the day before yesterday. I was very skeptical of it because one should not be just looking at a one-day move of FIIs. FIIs, you should assume that they are net sellers. If they are buyers, so be it. But you should not be surprised with sellers, with them selling. So mid-cap hit a 2-week high. Nifty small cap hit a 1-week high yesterday. The focus was more on the broader market, which has been battered, where there's a lot of despair. So that you had mid-cap, small cap, micro cap were doing very well. Nifty closed in the negative. Bank Nifty closed in the positive. At one time, it was quite strong. Again, tomorrow is the RBI policy, so I think people are building up positions. I think the smart money is now entered the market for the last few days. I'll show you with the graph as to why I feel that. Pharma also did well. So bank, as I said, 4-week high. And today, we are looking at yesterday FMCG decline, which is expected. Realty hit a 3-week high, which is all interest rate sensitive stocks did well yesterday. US markets were scared. In the beginning, they were all down. But even NASDAQ, which was down significantly because of Google's results, closed in the green. All three markets, Dow, NASDAQ, and S&P closed in the green. So 10-year yield, which is what I look at, from 4.8, it has now come to 4.42. As I keep repeating, we will soon see the next 6 months below 4, and that will be good for emerging markets, specifically for India. It's confirmed that Mr. Modi is meeting Mr. Trump on February 13th. He'll be the first major country leader who is going to meet Mr. Trump, notwithstanding Israel Prime Minister having met Modi. I think Israel doesn't figure. so strong, so importantly as far as the economic superpowers are concerned. So it will be very interesting, and I think it will become a positive outcome of the meeting. So two-year treasury yield fell, Bitcoin was down. So what did the FIs and DIs do? FIs did what they do best. Every day, get up in the morning, sell, and go back to sleep. Probably the day before yesterday was an aberration. So one can expect FI selling to come at all levels. But note that despite FI selling of 1,680 crores, there's a cumulative selling every day. Selling is there. Yet the market has bounced back. So this is where the smart money is accumulating, is what we should infer. DIs could not match. So as I'm saying, again, go back to the chart. We are talking of smart money. So we are somewhere in the takeoff stage, according to me, and it will take some time for market to gain, confidence, because now market is in the despair situation. So let me show it to you with a real life example. If you observe, this is a weekly chart. This chart has been drawn. The bottom is from March of 2020. So I've just shown you only the first part of it. The second part of it. So if you remember, in September end, JP Morgan came with 160 investors, and they talked of 35,000 Nifty. So people thought India is a new paradigm. Honest to God, I also got sucked in, because I thought, things may get better. But everybody seemed to have been very bullish end of September, especially on the Nifty and Bank Nifty. We crossed 26,000, 26,200. Then the market started falling. People said it's China. People said it is because results are not that great. But finally, for next 2 months, October and November, we had a terrible fall for some 7 weeks in a row, and then it bottomed out based on low RSI, and then it started going up. And then if we felt it is returned to normal. See, we come to know of these charts only when the charts are completed. At this new paradigm, we wouldn't know that. And when it falls, we are in denial, because there is nothing changed in our fundamentals, in that macro fundamentals. But of course, corporate results came. They were not that good. Corporate results were not good in March quarter. They were not good in June quarter. But in September quarter, everybody caught on to the negativity of the corporate results, and everybody started smashing. So that was what the smart money took advantage of the denial. So then the bull trap. So when the market started going up, we also felt that market is now oversold. So it is going up, because here it could be denial, this return to normal. So one can always, adjust it and justify it. But if you look at this chart now, I'm more confident than ever before that this is how the chart has played out. New paradigm, denial happened, bull trap happened here. We thought normalcy has happened, because generally 80% of the time the the Deepavali Pongal period is very good. But this was, we thought so, therefore in January it will do well. But January was the worst. So for the first time this century, we saw 4 months in succession of fall. So people now have stopped believing that 3 months fall is the norm or the worst case. But now 4 months has happened. Now people have begun to believe that it is going to be the 5th month. Despair. Lots of people who are savvy investors gave up last Tuesday, 28th of January, when left, right, center selling was there across the board, especially in the micro cap, small cap, and mid cap. And people who had taken advantage of the MTF facility, margin trading funding facility, all panicked and sold in the last week of January 28th. About 50% of the stocks were down more than 40%, and about 15% of the stocks were down more than 50%. This kind of fall, this kind of moves, this is from the 52-week high I'm talking about, not all-time high. All-time high, some stocks have gone much lower also, because this 52-week high, if you look at it, 50% of the stocks had fallen more than 40% on 28 January. The 15% of the stocks had fallen 50%. 87% of the stocks had fallen 20%. 20% and down is considered a bear market. So 87% on 20, this is the data we have of 27th January. On 28 January was the worst. So you can say about 90% of the stocks were below 20% from their 52-week highs. Again, reminding you, it is not the all-time high, 52-week high. All-time highs were higher than the 52-week high in many cases. So when 90% of the stocks are down by 20%, then we can consider it a bear market. Generally, when there is such despair, 90% of the stocks are down, you can expect the beginning of a new bull. So now we have again come back. People are slowly, people are not believing this rally. They think this is a suckers rally and it will again come down. But my understanding of this chart, if this is right, as per my analysis, I think we are in the beginning of a big bull rally, big bullish phase. It looks impossible at this point of time, but we felt the same thing in June 2022. We felt the same thing in March 2020. We felt the same thing in March 2023, that, things cannot get better at all. You forget the March 2020, you can say the whole world put in money because of COVID. But in June 2022, we had a similar situation where many stocks had fallen 40-50%. But people then thought that the story is over because the COVID revenge buying is over. But from there, from 15,200 on Nifty, we went up to 26,000. But before we went to 26,000, we also had this Adani problem in January of 2023. By March of 2023, we had almost come back to where we started in June of 2022. June of 2022 was 15,200. In March of 2023, we had reached 16,800. Most people thought it will collapse. But from 16,800, we had a 10,000 point rally on the Nifty, much higher percentage rally on the mid cap, micro cap, and small cap. So I am expecting something significant to happen this time. The reason being, the reason for this market to go up, they're manifold. The speculative bubble is over from much part of the system. Not that everything is over, but most part of the system is clean now because MTF is gone. So these weekly settlements are gone. So all that is gone, and you got a budget, which I keep telling. I will talk about the budget enough number of times. It's not enough actually, because the budget is across the board. It is good. It is not a consumption budget alone, as people are thinking. It is a consumption budget. It's an investment budget. It is a simplified budget. It is a budget without any freebies, extra freebies. People thought we'll have some Behna, Ladli Behna scheme and all that. Nothing is there. So this budget, as I keep saying, it is like the Jacques Kallis budget. People will feel, oh, who is Jacques Kallis? His test record is better than Tendulkar's average, and his Zahir Khan's in terms of bowling is equivalent to Zahir Khan. So that is the kind of budget it is. It is not a unidimensional, which many people are thinking that 12 lakhs we have got, so that is consumption budget. It is not so. Infrastructure has been increased to 1.21 lakh crores, 11.21 lakh crores. You have defense budget, which is going to be about 50% higher, and you have the housing budget, where it's another 44% higher. All that is there, which will show up in the next 6 months. It may not happen tomorrow. For instance, today also it may fall down market. Tomorrow it may fall down. But I am confident to say that the worst is over. Family money has been put in the last 2 days. We are putting our own money where, because that's what we are. That's the final, arbiter. You should put your money where your mouth is. We have put significant amount of money in the last 2 days. Family money. I've been requesting my relatives to put in money at this point of time. There is very, very little chance of downside unless there is some black swan event, which nobody can anyway predict. But under normal conditions, I think we are beginning, because the despair is there. When there is despair, we should be buying. So I feel, I'm confident. I go confident every day. Yesterday also we had a very good day. I had mentioned that I will find out I will inform what happened yesterday. Yesterday I had opened up my trading room to all people on my Telegram group. Every Monday I do it. Yesterday I did it on Wednesday, because Monday I was busy in something, and so we had one of the best profits in a very long time as far as day trading is concerned. Leave day trading aside. I think this is a time to invest, and invest heavily. Not people are talking of investing 20%. That will not work out, because if the market goes up, you will not feel like investing, because you are waiting for the lower prices. We have invested 100% yesterday, fully. Whatever money we had, we have put money, and I go with that kind of confidence. Whatever you do today, I hope it is successful. Thank you for joining me.